For as long as most of us can remember, real estate investing has kind of followed the same old script, right? You find a property, you run the numbers, and then you trust your gut. Well, today, artificial intelligence is coming in and completely rewriting that playbook. It's shifting the entire game from just instinct to actual data-driven foresight. So let me start with a question for you. Are you making your investment decisions by looking in the rearview mirror? I mean, for a long, long time, that's really all anyone had, a view based entirely on what's already happened. We're about to see exactly why that just doesn't cut it anymore.
And that brings us right to the old way of doing things. The traditional approach to real estate analysis. It's gotten people far, for sure, but it's built on a foundation that is really starting to show its cracks.
Now, if you've ever invested in real estate, these challenges probably sound, well, really familiar. The market isn't transparent like the stock market. You're always working with incomplete data. Your decisions are based on lagging indicators, like what a house down the street sold for 6 months ago. And then, of course, there's our own human bias and just the sheer complexity of it all. I mean, trying to juggle every single factor in your head is pretty much an impossible task.
And here is the real cost of that old method: time. We're talking weeks just to pull the data together, maybe months for a deep analysis, and then another 30 to 90 days for due diligence. By the time you're finally ready to pull the trigger, that golden opportunity, it might be long gone. The market moved on while you were still staring into that rearview mirror. But it's not just about slow data. Honestly, the bigger problem is often how our own minds get in the way. Even the sharpest, most experienced investors have these cognitive biases that can quietly sabotage their own returns. Okay, take anchoring bias. We've all seen this. A seller lists a property at a super high price. That number, the anchor, gets stuck in your head. And from that point on, it subconsciously influences every offer and counteroffer, even if that initial price has absolutely no connection to the property's real value. But this is where AI is a complete game changer. An AI model doesn't have emotions. It isn't impressed or intimidated by a big asking price. It just looks at thousands of data points, recent sales, market trends, property features, and comes up with a fair market value, totally free of that emotional anchor. And then you've got confirmation bias. This is the hometown hero investor, right? The person who's convinced their local market is the best place to invest, period. So they only look for news that confirms that belief, while totally ignoring data showing incredible opportunities just 2 states over. It feels safe, but man, it's a huge blind spot. And you guessed it, AI is the perfect antidote. It has no hometown pride. It analyzes every single market with the same cold, impartial logic. It'll flag hidden gems in places you've literally never heard of, and it'll uncover hidden risks in the very neighborhood you grew up in. Okay, so here's the crucial point. To get a real edge in today's world, we need to make a fundamental shift. We have to stop reacting to what's already happened and start predicting what's going to happen next. And to do that, you need a completely new kind of data.
Just look at this comparison. On the left, that's the old world, lagging indicators, things like past home sales and median prices. They just confirm what already happened. But on the right, that's the new world, leading indicators, things like a sudden surge in Google searches for a specific neighborhood, or a spike in new building permits, or strong job growth forecasts. These are predictive. They tell you what's likely to happen next. So where in the world do we find these predictive signals? Well, they're hidden in what you could call a digital ocean, this massive, vast world of alternative data that until very recently has been impossible for any human to analyze. But AI is built to swim in that ocean. I mean, we're talking about using satellite imagery to track new construction from space. We're talking about analyzing social media sentiment to see if a neighborhood's reputation is getting better or worse in real time. Even using mobile data to see where people are physically moving to and from. Every one of these is like a little breadcrumb, leading to the next big thing. Okay, so that's the theory. But what does all of this look like in practice? Let's talk about the specific superpowers AI brings to the table. How it turns all this raw data into something you can actually use to make way smarter investments. Imagine a system that can pinpoint up-and-coming hotspots before they ever hit the news. Or one that can find off-market deals by predicting which homeowners are the most likely to sell soon.
On the flip side, it can flag hidden risks that a human inspector might miss just by analyzing data from thousands of similar properties. It can even give you a dynamic risk score for a property that changes in real time as the market changes. So here's a quick story of how it works. First, the AI detects a few signals. Okay, more people are searching online for homes in neighborhood X. There's a jump in building permits, and the chatter on social media is getting really positive. Then it connects those signals to other data points like, say, a big new company moving to town. And finally, boom, it issues an alert. This neighborhood is about to take off. So what's the tangible, real-world benefit of being able to see the future like this? Well, the numbers, they're pretty incredible. A well-trained AI model can predict a 15% appreciation in a neighborhood a full 6 months before the old-school traditional methods even show that a trend is starting. I mean, think about that. 6 months. That is the difference between getting in at the very beginning and just chasing the market after all the real gains have already been made. And when you put all of this together, it brings us to a brand new investment playbook. The game is changing, and what gives you a competitive edge is no longer what it used to be.
And the key to making all this work, as the folks at McKinsey point out, isn't just about having the fanciest algorithm. The real magic happens when you combine that incredible technology with deep, on-the-ground industry knowledge. The machine is amazing at finding the patterns, but it's the human expert who provides the crucial context.
So let's be really clear about this. AI is not here to replace an investor's intuition. Not at all. It's here to supercharge it. It's about giving your gut feeling a solid foundation of millions of data points, making it sharper, faster, and way more accurate. At the end of the day, the new competitive edge is this one fundamental shift. It's moving from making decisions based on what you feel might be the right move to making decisions based on what the data knows is happening now and what it predicts will happen next. Which leaves us with one final big question to think about. In this new age of real estate where data can literally see around the corner, is your gut feel still your most reliable asset, or has it actually become a cognitive liability?